But let's get talking to another mid-cap or another broader market company. Suzlon Energy, 1,200 crore rights issue has gotten oversubscribed by around 1.8 times. The issue saw a subscription of around 435.5 crore shares. To discuss more on this, the company's fundraising plans, we have with us Himanshu Mody, who's the CFO of Suzlon Energy, joining in on the show. Mr. Mody, hi, welcome to the show. If you could just detail to us, it's around a 1,200 crore rights issue. You had mentioned last time that you would be using majority of the funds to repay debt. Just list out what exactly the fund utilization would be for Suzlon now.
So, firstly, on behalf of the entire Suzlon management team, I'd like to thank all the shareholders for the confidence and the overwhelming response that we've seen on the rights issue. I think this is a very strong testament to the entire organization and a strong tribute to our founding chairman, Mr. Tulsi Tanti. So, through the process of the rights issue, the rights issue size was about 1,200 crores, of which we are making the first call for about 50%, which is 600 crores. And a large part of that, other than issue expenses, so to the extent of 585 crores, would immediately go towards debt repayment out of the first call.
So, just wanted to understand that if I look at your finance costs over the last few years, FY20 was closer to 1,400 crores, FY21 sub 1,000 crores, FY22 735 crores. First quarter, you did about 150 odd crores. Annualize that comes to 600 crores. But, after that, you've done a lot of debt repayment plans, you've done a lot of refinancing, etc. So where does this quarterly finance cost settle? How much can that number be for this year and going forward?
So Q1 of FY23 won't be a barometer, so I don't think it's fair to analyze the interest cost basis Q1, because there was a refinancing exercise, a large refinancing exercise that the company undertook in May 2022, which is halfway through the Q1. If you see our overall debt as on June 2022 on a consolidated basis stood at about 3,200 crores. And through the rights issue, assuming now the entire call on the rights issue is made, approximately about 900 crores is what we are looking to repay the debt from the rights issue proceeds. So, and of course, there are scheduled repayments through the FY23 cycle. So, as I mentioned last time, we'd be directionally looking at a debt to EBITDA of anywhere between around close to 2:1. And our existing debt stands at about 9.5% to 10% in terms of costs. So on an annualized basis, even at 3,200 crores, which is pre-rights issue debt, our finance cost should be around 300 crores, which would significantly now come down once we repay the debt through the rights issue proceeds.
Okay. So if we were to have the same conversation, same time next year, Mr. Mody, guide us as to what your balance sheet would look like and what might your order book look like as well.
So same time next year, of course, from an interest cost perspective, I think we are working towards further optimizing the balance sheet. It would be, of course, even more less than 2:1 debt to EBITDA. So I think, directionally, one should be looking at close to about 200 to 250 crores in terms of interest costs on the company. So far as the order book is concerned, the foundation of the company is fairly strong from a technological perspective, or ability to execute the projects is very strong and robust. What was ailing the company historically was its balance sheet and the debt on the balance sheet, which now after the rights issue has significantly been resolved. And therefore now the focus would be only on order execution. So from an order book perspective, as on June 30th, 2022, we had an order book of close to about 700 megawatts. There are about 2 or 3 orders rather we've announced subsequent to that. So our existing order book sits a little shy of about a gigawatt as we speak.
How much is operation and maintenance as a percentage of sales? How much does that go to from here? Because that also helps in reducing your fixed costs. So
O&M is, it's a different business. It's a subsidiary. So that's, roughly about 25 to 30% of our top line comes from the O&M business.